Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, February 18, 2010. Let's start by taking a look at the euro-dollar pair, which we see overnight fell in favor of the greenback as we had a bit of a sell-off in commodities. But then we rallied in New York trading as the euro popped here up to 1.3650, though it gave up those gains in a volatile New York session. We had back and forth in terms of risk appetite as we had a weak U.S. weekly jobless claims report. But then as traders realized that maybe it wasn't as bad as the overall figure had represented, we saw a move back into U.S. equities. Also, investor appetite got a boost from a better than expected Philly Fed manufacturing index. However, after the choppy trading we saw in the New York morning session, we remain at 1.3570 now, which was the level we had seen during most of this overnight trading. That completed a swing from our resistance near 1.38 that we had hit in yesterday's session and tested our low from last Friday's session near 1.3540. So we did find some support here, which is a multi-month low. Turning to the U.S. data, we had initial claims for jobless benefits for the week ending February 13th rise by 31,000 to 473,000. That was a much higher figure than forecasts had anticipated, and we also saw continuing claims rise to 4.46 million. However, the time period that the data focused on included very large blizzards in the U.S., which dumped a record amount of snow on many U.S. cities, and were probably responsible for part of the weakness in the reading. Still, it gave markets a scare that perhaps the labor market improvement that many economists have been touting has hit a bit of a rut. So it'll be important to monitor what we see in next week's jobless claims. A second release was the Philly Fed Manufacturing Index for the month of January, and it rose to 17.6, which was slightly better than expected and better than the 15.2 reading we saw in January. The increase was led by a surge in new orders, with that index rising to 22.7. Shipments were up as well, and employment rose to 7.4, which is the third consecutive month that more firms reported an increase in employment than reported declines. Overall, this index shows that the manufacturing sector in this region remains strong, and the manufacturing sector will continue to be a spearhead in the U.S. economic recovery. We also had producer prices released in today's session for the month of January, and we saw a rather sharp 1.4% increase on the month. In annual terms, producer prices are higher by 4.6%. Looking at the core readings, we had a 0.3% increase on the month, and annual prices are up 1%. So all of these readings were higher than expected. As we saw with import prices yesterday, most of this swing was a result of higher energy costs. With the U.S. economy's recovery more firmly in place, investors are now starting to pay more attention to readings on inflation, as they could be a leading signal for when the Fed decides that it needs to begin tightening monetary policy. In the last fundamental report, the Conference Board put out its index of leading economic indicators for the month of January, and it saw a 10th consecutive rise, 0.3% increase. In a look at the dollar-yen pair, we see that the yen gained in overnight trading until it tested support at 90.55. We had the Bank of Japan decide on interest rates, where it held rates steady at 0.1%, but there was some important news. First, the Japan Central Bank chief escalated pressure on the Prime Minister to contain Japan's debt, which is the largest in the world, with a warning that investors' trust won't be assured in the aftermath of what's been going on with Greece. The BOJ chief, Shirakawa, said it's important to gain the trust of financial markets by showing a path for fiscal consolidation. His remarks reflect concern that increasing the Bank of Japan's debt purchases risks giving investors the impression that it is willing to fund fiscal expansion. So far, as part of its efforts, the BOJ had unveiled a program of lending 10 trillion yen, or about $109 billion, to commercial banks in December. It's also buying 1.8 trillion yen in government bonds each month, and has kept the benchmark interest rate at 0.1% since December 2008. Therefore, it believes that it is doing as much as it can in terms of monetary policy. So these comments come after the finance minister had stepped up pressure on the Bank of Japan to fight deflation. Still, the tone by the Bank of Japan helped strengthen the yen, but we did see with a jump in risk appetite in the New York morning session that the greenback managed to pair those losses it had overnight and to move above its resistance from last week around the 91.25 area. The Australian dollar Japanese yen pair has also rallied from the sharp slide we saw 2 weeks ago and is now testing this level here, which was our resistance in mid-January. So we turned back from that level in yesterday's trading, and we did see a move in favor of the yen overnight as commodity prices fell on the news that the International Monetary Fund said that it would begin selling to the market its remaining 191 metric tons of gold it had slated for release. So commodity-influenced currencies like Australian and New Zealand dollars fell overnight. However, we did see this rebound in the wake of gains in U.S. equities, and so we have retested our resistance again. So we've had a bit of a swing in risk appetite sentiments. Turning to the UK government said that public sector borrowing increased more than expected in January, with tax revenue falling significantly and central government spending rising. The UK government borrowed a net £4.3 billion in January, compared with a net repayment of $5.3 billion a year earlier. This was the first time since records began in 1993 that there was net borrowing in January. The data will add to jitters about the fiscal health of the UK and other European economies. The pound-dollar pair slid sharply overnight and following the government borrowing data. We tested the 1.5550 area is our support throughout this consolidation zone we've been seeing the last 2 weeks. We had poked above resistance in yesterday's session, but now we've moved all the way back down to our support. Tomorrow, the UK posts its retail sales figures, so that could be an important fundamental risk event, which could push us out of this consolidation range. Turning to Canada, we saw consumer prices rise 0.3% on the month in January, which undid the 0.3% decline in December. In annual terms, CPI rose 1.9%, a figure that was higher than expected, and 0.6 percentage points higher than in December. Core CPI was up 0.1% on the month, and the core annual rate hit 2%. That was the first time since May 2009 that core rate has moved to 2%. The data is likely to stoke speculation that the central bank would move faster than expected to hike interest rates. In a second bit of news from Canada, non-residents acquired 11.2 billion Canadian dollars of Canadian securities in December on the back of purchases of Canadian bonds. Non-residents added 9.5 billion of Canadian bonds to their holdings. Canada being one of the handful of developed world currencies that wasn't facing some scrutiny over its fiscal position or concerns for potentially negative ratings events in December, made it a very good destination for those seeking government bonds. In the US dollar Canadian dollar pair, we saw the Canadian dollar gain in New York trading until it reached support at the 1.04 area. That has been our support throughout this week. In overnight trading, we tested resistance from at 1.05. That was a level that had acted as support last week, but now it may have switched its role to act as resistance. Now let's turn our attention to upcoming fundamental releases to close out the week. Tonight, Japan posts its All-Industrial Activity Index, and the Bank of Japan releases its monthly report. Overnight, Germany releases data on producer prices, and UK posts its retail sales, and the Eurozone releases its current account. Tomorrow, we get our third inflation report from the US, the Consumer Price Index, while Canada releases data on its retail sales and its leading index. So with several of our pairs at key support and resistance levels, we'll see how the markets end the week. And that will wrap it up for today's daily market recap. For more news, videos, and analysis, please visit our site, FXTimes.com. I want to thank you for watching and wish you good trading.